In this video, we're going to look at, okay, so you chase the market, now what? Stay tuned. Hey traders, a very warm welcome to you. Okay, so we have all been in this situation. I've been in this situation before, and this really is useful for anyone who has chased a market, whether that be a cryptocurrency, whether that be a stock, a commodity, whatever it may be. You've chased, you've got in. Now what do? You've got a lot of decisions to make. We're going to look at some of this decision-making process and what you should do with your trade. Okay, the first thing is you need to, without any shadow of a doubt, reevaluate without bias. Now, that may mean, depending on the person you are, the type of trader you are, that may well mean you've got to cut the position to reevaluate and go back in if you still consider it a good long, or you don't do it at all. But if you can reevaluate without bias, when you've still got your position on, by all means do that. So what does that entail? That basically entails saying, listen, what is your decision-making process? Is it technicals? Is it fundamentals? What are all the things that come together that have made you evaluate that trade? Okay, let's say in the cryptocurrency market, you think that one of those cryptocurrencies, altcoins, whatever it is, was ripping to highs. Did you buy it purely because it was going to highs and you just thought it was going to carry on going up? In which case, now that it's 50% down off the highs, that reevaluation becomes very clear. It's like, listen, I bought it from a momentum play. It hasn't happened. I need to cut it. If you bought something based on a thesis of fundamentals happening, they're going to get bought out, they're going to have this new technology, or it's a technical pattern, this was happening, you can still be evaluating it. Now, I would have to put a caveat in here and say, hey, if you were trading on a technical pattern, you probably wouldn't be chasing it and still holding it now. I hope that you would have come out and stopped. But let's assume we all make mistakes, we're all human beings. You've done this and it could be a technical pattern. You still have to reevaluate and say, okay, maybe that technical pattern is broken. Do I still want this trade? Because I understand, right? I can stand here in front of you and say, you just got to cut it. It's not done what you said it's going to do. Your thesis has been disproved. Get out of it. But I know that in the real world, there are people out there, and I've done this myself. It's not something I do anymore. But I know the people out there who have done this. They've broken the rules. They're in a position and they feel like they're a deer stuck in the headlights. You're like, hey, what do I do with this position? What do I do with this position? I was going to come to this at the end, but I'm going to say it now. The thing is we're doing with this scenario or this process is taking charge. It's your money on the table. I don't care, whether you've made millions beforehand and you're playing with so-called house money or whatever it may be. It's your money. You need to take charge of this trade in a very clinical fashion. So the first thing is to reevaluate without bias. Look at it. Is it still a valid long? What are the reasons for the long? What are the reasons for the short? Take your rose tinteds off and just look at all the arguments and try to look at it without bias. Forget how much you've lost or whatever position you've got or where you bought at or this, and stop framing the trade based on an anchor point of where I bought or the high or this. Frame it based on now. What is the chart looking like now if you're basing your decision making on charts? What are the fundamentals? What are the pros? What are the cons? Reevaluate. Do I still want it? If you still want it, great. If you don't, this is easy. You cut it, you get out, you put a plan for getting back in if you want to get back in. But if you still want it, we start to move on. Number two, we say, okay, what are we going to do? Are we going to trim the position? Do we still want it but not as much size? Are we in a little bit too much size here? It's a little bit too concerned about the moves. Do we want to trim the position if we get to a certain level higher, lower? This comes out here, 2 and 3 come pretty similar together. Set levels and areas to review. Once you've clinically and objectively looked at your position, you can look and say, hey, if we go lower here under this level, I'm going to review the situation because this is a key level that I don't want it to go to, and I need to reevaluate the position. Same with the highs. If it starts pushing back up, we're not benchmarking it on the level we got in. We're talking about chasing at highs. We've got it right at highs. It's come right off. We're talking about another key level. Hey, let me reevaluate. Right, it's at support, it's at resistance level. What am I going to do here? Am I adding more to the position? Am I taking more off? But planning it again as you would a trade that you're presenting to somebody. Let's say you're presenting this trade idea to somebody who was going to put 10 million pounds into this trade, and you had to have everything lined out, very methodical, very clear. That's what you should be doing with your own kind of money. All right. So we're setting levels and areas to review. And that means, again, looking at it objectively without bias at those key levels. Now, the advantage of doing this is that you're not looking at it all the time, because let's be honest, this is going to be an emotional trade for you now. You've chased it, you've probably held it on longer than you wanted, you're in a loss you don't really want. And the obvious thing is to cut it, but we're looking at it from a different angle here and saying that's the easy thing to do. What about if we analysed it and refocused? If we then looked at areas to review and said, okay, these are my levels, it stops you looking at it every day. You set your alerts, review alert levels, alarm goes off, email comes to you, SMS, whatever it may be. You go to your screen, you punch up whatever it is you're in, and you review it. What you don't want to be doing is getting trapped even more in this vicious cycle of loss, 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 gain, 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 loss, 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 an emotional swing that we talk about. That is exactly what you do not be involved in. So setting the areas, levels to review, so you can relax knowing that you have a plan of action, you reevaluated it, you've consciously said to yourself, I am still going to hold the trade, number one. And now I've said the areas I want to review, whether that's still valid. So you can feel more comfortable. You can take the weight off the shoulders. Yes, you're still in loss. Yes, you're still down on the trade, but you've made a conscious decision, as opposed to many people who are in this situation who will just be like, oh, don't go any lower, don't go lower, and it goes lower. They're panicking, panicking, panicking. Oh, I might as well hold it now. Goes back up, and it becomes, you know, several months of emotional ride for them that they do not need to have. Taking charge all comes back to this taking charge kind of benchmark, if you like. And the fourth is to plan each and every outcome, as you would do, or you should do if you're taking a trade anyway. It's like, hey, okay, if we go down X%, how does that affect my P&L? Am I comfortable with that? You know, where will that put my account? Will that put this? Is that okay? If it's not and it's feasible, do I need to cut my position size? Do I need to trim the position? Okay, if it goes up here, where's that going to put me in this? Where's it going to put? So planning every outcome, because once you start to realize the different avenues this trade could take and become comfortable with the risk, comfortable with the reward, comfortable with the majority of the outcomes, then you can be at peace, if you want to use that word, with the trade. You've planned it, you've got areas to review, you've got a plan moving forward, you know the best, worst that can happen, the intermediates that can happen, you're happy with it, you're satisfied, it's in the portfolio, it is what it is, and you're going to deal with it. You've taken charge of the situation, what will be, but you know you've got a plan and you're comfortable with the outcome that will happen. So that's my main thing, guys. If you chased it, now what? Do not just sit like a deer in headlights, reevaluate it without bias, trim the position if you need to, set your levels and areas to review so that you're not a slave to the tape. And fourth, plan each and every outcome. Really, I should have added there from a financial perspective, so you're comfortable with the risk. So you're not waking up one morning, seeing something down 10% and going, oh, that's really brutalized my account. Didn't realize that could happen. Look and say, okay, well, that could happen. And am I comfortable with it? No. Trim. I'm comfortable with it now. Yes, keep it as it is. All right, guys. See you next one. Take care. Bye-bye.